Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
Tax loss harvesting, we do it throughout the year. I would say most do it year end. So it's definitely a good year end kind of reminder if you don't have someone professionally doing it for you. And that is, hey, if I have something that is at a loss right now, I'm going to sell it, harvest the loss, take on the loss, and then buy something else. You can't buy the exact same investment, but buy something else for 31 days. And then those losses can either offset capital gains that you already have, or they can go against ordinary income. Up to $3,000.
Up to $3,000, yeah. Emphasize on the 31 days because there's what's called a wash sale rule. Yep. So if you sell something for a loss and then buy it back within that 31-day period of time, it disallows that loss on your taxes. By the way, that includes a dividend. So if a dividend pays in that window, so just be careful of that. And being deliberate about realizing losses as best you possibly can, simply because we want to use those to offset against gains. 2025 is turning out to be another year where we don't have a lot of losses.
No, but that's also why we do it throughout year end. There were a lot of clients that we did harvest losses in April.
Yep.
Right? So when the market was down, and no, it's not we're intentionally looking to have a loss in the portfolio, but we're going to have something, right, that goes down. And so it's just taking advantage of it while still keeping the money invested.
I kind of describe those losses as like a credit account, right, where you can use to offset against future gains.
Yep. They just keep carrying forward.
Exactly. Which, to your point, it's not that we're doing it intentionally to have losses. We don't want to materialize losses. But at the end of the day, it's another one of these optimizations where you harvest a loss, you can buy something else. It could be a proxy, right? Yep. Like, for example, in our value portfolios, we'll sell individual stocks that have losses and then we'll buy an ETF. It's not the same thing. It's not like kind. Yep. So it allows us to have, the equal level of allocation, but we're not actually owning that specific position. We wait the 31 days, we buy them back. Beautiful.
We've saved just in tax money.
And potentially have a chit going forward.
Right.
Right. I mean, to offset future gains, which hopefully we have lots and lots and lots of those.
Exactly.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.